Good morning, traders. It's 8 a.m. Chicago time on Thursday, the 23rd of June, 2022. This is episode number 2258. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. How's my voice coming across? Nice and deep and just sexy. I'm just kidding. Let's jump right into the convergent trading pre-market summary sheet and take a look at where we are. The overnight risk posture is completely neutral at the moment. We do have the European markets dragging us down a little bit, with the U.S. markets holding up steady. The U.S. markets reopened at settlement, tested a little bit lower, back down to that wonderful 37.35 area, if you recall, and popped higher just a couple hours ago or so. So that's where we stand. Notice that there's an allocation to the treasuries this morning with a strong pop, money flowing out of the Eurostoxx 50, the German DAX, into the Bund, and the BTP and all that. The European Treasury futures, basically. That's a pretty strong move for the Bund there. 239 ticks higher from settlement. And overall, what's happening in the commodity space is it is getting hammered. As you can see, copper is down 260 basis points, and this is demand destruction. So, as it says in the economic events and event risk box, the market is really polarized, and I talked about this over the last couple of days. Because we see it in the profile, it's relatively decently predictable. The market's polarized, and this morning we got the flash PMIs in the Eurozone, mainly out of Great Britain and Germany, and they're both weaker. Treasuries are rallying as a result, and commodities are weak. Therefore, this is considered disinflationary. Those prices are going down. In addition to that, the container index for the Pacific, which is CVANs or cargo containers coming from China to LA and the U.S.'s major Western ports, those containers have slowed dramatically. There's a very low demand. There's a relatively low demand, and there's a high inventory on retail products. In other words, stores like Target, Walmart, and so on are not demanding or not asking or not buying products as much. So containers have gone down from $25,000 per container to around $9,000. And just as a reference, the pre-pandemic container cost somewhere between $2,200 and $2,800 per container. There's a glut of containers in LA. Warehouses are 99.7% loaded. How does this tie into today's trading? This is just a macro overview. We're still in the macro portion of the broadcast here. And what it's saying is there's just a slowdown going on, and we see it in retail. We saw Target get hammered a couple weeks ago with the adjustment of expectations, and the market is correcting itself. Right? It's there's demand destruction there, so we see the ensuing results. So this morning, as I said, the flash numbers came out weak in Germany and Great Britain. We did get the current account number for the U.S. With a huge deficit, $291.4 billion for Q1 versus $275 billion, so much worse. Initial claims came in at 229,000 versus 227,000, slightly higher, which is negative. And then we're expecting at 15 minutes after the open, we're expecting the flash PMIs for the U.S. These can be movers. So watch out for that. Then we have the Fed chair's testimony to the House today, same as yesterday, but might get asked different questions and might give different answers. So Fed's chair J. Powell, is going to be on today at 10 o'clock again. We have the stress tests at 4:30, and then we have the Great Britain GfK Consumer Confidence. This is a mover at 7:01 p.m. And then the Japanese inflation rate year on year, very important number. Japan is a liquidity provider for the globe. So at 7:30 p.m., we have the inflation number out of Japan. Okay? So that's where that stands. Turning our attention to the S&P in the box in the middle here. There are statistics here as well as facts. The S&P has traded 248,000 contracts since yesterday's settlement. The inventory is balanced, completely balanced. So the volume above and below yesterday's close or settlement is pretty much balanced. And we're looking at a range of 62 points, which is relatively wide. Remember, normal range for the overnight session for the S&P on the last 252 sessions, which is 1 year, everything inside of 49 points right down here is normal. Anything above 49 points is considered second sigma, in the second sigma range, which is relatively rare. Okay, so it's on a balanced distribution. That's an occurrence of about 2.5% or something like that, 2.25%. So we're above that. So unusually high range, which is great. Just like yesterday, we talked about coming in with unusually high range overnight, generally carries into the day session. This is generally a precursor for what we should expect for today's session. So we're expecting more movement, just like yesterday, into today's session. A real quick look at yesterday. There's a lot to explain here. I'm going to try to not run into the open. It's been very hard to do so. This is what I was talking about yesterday, in that we had come down in the overnight session. We had a multi-distribution profile, and we had balanced at the lower end of the range, and we had created this point of control basically around that 37.11. Again, the 37.11.12 is a key number, key number. We'll look at that again. And what the market had done is it had pushed down and it had held the full session VWAP at this point and is holding steady. And the expectation is, hey, guys, if we open right here at 37.11 and we push below and we pull back to the 37.11, then I'm looking for the short right there at the X against the 37.11. And in that case, we have a market that is sliding from the upper distribution to the lower distribution of what has been a double distribution profile for the last week and a half or so, and 36.75 is the lower balance. If it does not do that, if it pushes up, holds, and then starts to move higher again, then we're looking at 75, and I also mentioned 38.09. Can somebody tell me what 38.09 is on a back-adjusted basis? All my prices are continuous back-adjusted contracts. That's a horrible-looking 8. But can anybody tell me what the 38.09 is and why it's expected? But more importantly, we're expecting the 75 again today if it holds above the 37.11. What the market did, yes, it's the P-month low, the prior month low. Very good. Must be Convergent members. Well educated. 38.09 on the high side is the extreme. Why is it an extreme? Can somebody tell me why I'm expecting this to be an extreme? Why am I expecting it to, with a high probability, to falter to 38.09 That is a shoe size, European and American shoe size. Why do I expect it to falter up there as a potential area to target? Why is that? What other statistic do we use to take on that idea that it's likely to falter up 38.09 if it's opening down here? Come on, it was in the prior sheet. Very important to remember. In any case, so that's the idea. The idea is if it opens, falls below 37.11, any retest of 37.11 is expected to be sold down into 36.75. If it opens, pulls back, and pushes higher, then we're looking for 75, 37.75. Yes, it's the daily stat range. 37.75 and a retest of the prior high with 38.09 as the most important area of resistance to test above the 37.75. I don't expect it to hold the 37.75. Why I don't expect it to hold the 37.75 is because we have done the work already. We did the work the day before. So if we're going to go all the way up here, then we are likely to squeeze one side or the other. Okay? Here's what actually happened. This is a day session only chart. This is yesterday's open. So look at where we open. Now remember, again, I know I'm repeating myself because it's important. 37.11 right in here is the cutting point. 37.11.12. So we either hold the lower distribution, 36.75. I know I'm beating up on this, guys, but it doesn't get more beautiful than this. The volume profiles don't get more beautiful than this as they are today. 37.75. Okay, and the idea yesterday when we were talking, the market was right in this 37.13, 37.11, 12 area. And the idea is because it was trending down, it was expected to pop higher, break down, and if it breaks down, and this is really important because I got a couple of comments yesterday, well, your main scenario was to sell and it went straight up. You were wrong. That's not how it works. It's not a binary thing, okay? What I said is big if, it opens wherever it was yesterday. If it opens, breaks down below the 1175 and retests, retest the 37.11 week, then I'm looking for the short. That's the big trade to hammer, and that's a quick trade. It can cover 40 points right quick down to 36.75. But what it did yesterday is it telegraphed that scenario 1, was not in play. Scenario 2 was in play. And that's the scenario where we open, push towards or hold above the 37.11.12, and we would target 75. We would target the prior high, which was 80 down here, 80 something right here. Target the prior high. And then what? 38.09. 38.09. So I went through it yesterday. I went through every level talking about 37.40 being key. So where's the 37.40? Look at that first push. 37.40. Pulls back once it breaks through on an impulse. This is an impulse right here. Once it breaks through on an impulse, where's the trade? The first trade that I took yesterday, let me look at my book here. The first trade that I took yesterday, I got stopped. I took a 37 quarter long, got stopped. Took a 32.75 long, got stopped. I think I didn't get a scale on this. So now I have a third strike. And then I got long 37 even, got scale, and then stopped on balance. That was at 8:42. That's 12 minutes after the open. And then at 9:02, and I laid this out in the Head Trader channel on Convergent Trading. At 9:02, I got long the 46, the 45.50 46. That's right here. Posted a chart of what that looks like, and then boom, that trade pays for the losses before it, and it gets us to the promised land. It pushes first to 3,800, had a struggle at 3,790. 3,790 was a very difficult level yesterday. Pulls back to the blue line, and then goes to where yesterday's high is 3805.50. It missed the 3809 by just 3.5 points on almost 100 points of range. This is how it works. This is not a promise. Past performance is not indicative of future results, but this is how profiling works. Once you see what the market has done and you have a plan, then you can play the levels that you're supposed to play. 3809 up here, right? And the market hits those nicely. We define our risk. We make sure our reward is multiple times our risk. And you just take the trade every time, right? That's our goal. Very difficult to accomplish for many people, but that's how it works. So looking back at yesterday, we opened right up here. We opened at 37.24, a far cry from the 11. So we're off the short scenario. I told you the trades. Long, 37.25, long, 32.75, long, 37, long, 46. Did you hear a short in there? No shorts. Why no shorts? It is already telling me that it's strong. It's holding the upper distribution. It did me the favor of running up right before the open. Right before the open, we had some really strong lifting here, and it held those prices, and it immediately pushed through. The first opportunity at the long, look at these tops. Then we break through on size. So the order flow is showing size, pushes 37.60, goes back to where? 37.45. 37.45.50, 37.45.50. That's the long that finally worked. So I tried these longs. I tried this long here. I tried this long here. I tried the long here. Those didn't work, but ultimately it did. I'm laying out how a plan turns into trades and how the market pays when we're on the right side. We have something substantial to lean against, which is basically the overall narrative, and that's the main piece here. Okay, I beat that one to death. Let's move on and look at what we've got today. So where are we today? Here's this profile has been cleaned up, and this profile, when I click on it, will show these dots. These are the two dots, and these are the start and finish dots for this profile, okay? So now you know the profile is made of these two distributions, and all we're doing is we're building on top of the 37.75, 37.77 area. We keep building on top, building on top, building on top. And what we've done, despite yesterday's sell-off, pre-market, we ended up being strong. The market is really holding a base. It's really paramount that we pay attention. If it falls below the 37.11.12 and really sees a flush or a push, our bias is going to change. But for now, our bias is we are stuck in this balance, and we are likely to challenge where we stand right now. We're likely to challenge this gap zone above. So it's doing whatever it can to get back up there and keep challenging. So today, I'm expecting that 38.09 to be tested, if not taken out, and I expect the market to try to push higher, towards the 39.50 or so. So that's key to know, because we have had multiple opportunities to get back down into the most recent low here, into the two-day bounce. We've had multiple opportunities to get through the low volume node, and what we've done is we have built some fuel. This is basically a coil that's being compressed right at that 37.75. It's being compressed, being compressed, being compressed. As soon as any pressure comes off, it is likely to pop pretty strong from where we are. So there's likely to be a strong trend day in the next couple days or so, today or tomorrow. There was a tremendous amount of selling into the close yesterday, so let's look at the relative delta. Look at this relative delta. I posted this after the close. Look at the S&P. The S&P was a seller all morning. This is why I expected it to hold that 37.11 and push lower. I have to go with the trend. And then it opens right here. The S&P opened right here. That's 8:30 Central, Chicago time. And we push higher, right? And we see the delta push higher. We've got good lifting from the very large lots. But as soon as we make that high at 3,800, sell, 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 sell. The very large lots go flat. The small lots start selling, and the large lots start selling. And as we make that high at 38.0550, look at where the delta is. The delta is a lot weaker. It's later in the day, but the delta is a lot weaker. And as the prices go down, the delta is dramatically falling until the cash close, the settlement period, where the delta gets absolutely obliterated. It gets crushed. It sells another 16,000 from negative 20 to negative 23, 36,000 contracts. That is trend down territory. And then what do? We come in today. We are pretty much sideways here. You can see the morning pretty much sideways. And then, but we just start to lift. We're lifting. We have large lots lifting. We have small lots lifting. So what this is it's a market, as I said, as it says in the Convergence Trading pre-market summary sheet, it's a market that is very polarized. So it has a good argument for being long. It has a good argument for being short, and we are in the middle. So make sure you wait. Make sure you wait for the market to provide some clarity before you dive in today. I got in too early. I don't like to trade in the first 15 minutes, and you saw that the first three trades I took either got fully stopped or scaled and stopped, and then finally caught that 45.50 area for a run to make up for it. So today I really need to exercise discipline and hold. What do we have for this morning? Let's look at the active chart for this morning. This morning, again, very choppy market. We open and we trade around the prior day's settlement. We lift a little bit. At 3 o'clock, we had those flash PMI numbers at 3:15, 3:30, 4 o'clock, 4:30 for France, Germany, the Eurozone, and Great Britain. We saw some reactions here, and then we bounced off of the full session VWAP, and we're holding steady. The point of control is below us. We have some distance to VWAP and mid, and we have some distance to the point of control, but we are inside of yesterday's range. We are inside of yesterday's point of control. Okay, so moving to this different screen, the expectations. Where are we now? We're inside of yesterday's point of control. There's yesterday's point of control, and we are trading against it. So we are completely imbalanced this morning, but the delta is showing some strength coming in. This is very likely to hold. Let me put this in here. Let's look at what's expected here for today. Stock zones on. So this morning, we are very likely to hold this 70 to 68 area. Very important to hold early, but the expectation is an open auction that attempts lower. The inventory is balanced, and I'm expecting this 38.05 to be gone. I'm expecting a 38.09 to be taken, and I'm expecting the market to start moving towards the prior week's high, which is at 38.40. The prior week's high is at 38.43, and let's start to push into the gap here. That's the primary scenario today, is to squeeze into the gap. The secondary scenario is it fails to do so. We get our overnight statistic. So we open, we push We open, we push the overnight stat, which is at 37.97. We push the 3,800, and then we have an impulse down. We have to have this impulse down with a weak pullback. And in that scenario, we're looking for the overnight point of control. We're looking for the settlement gap. And then we're starting to challenge this weak low that we left behind in the overnight session at 37.35. And now we got something. Now we're looking to challenge the 11.12 area. This is the better trade. Scenario 2 is the better trade where we sell off. We attempt to push higher into the 3800s. We cannot. 09 closes the door. That's the prior month's low. It closes the door, then we rotate, and then we get flow to the downside, and we cross the entire range of yesterday. That is troublesome. That's where the trend starts to break, and now we have 36.75 as our key target down here. This point of control, that becomes a key target again. So we are doing this back and forth, but yet we're opening in yesterday's balance, which is also the prior day's balance. So yesterday's balance, the point of control is on top of the prior day's point of control, the 75.80 area, and we're opening right here, okay? I know that's a lot to cover. It's not always this active, but one last thing I want to tell you about is today at 1 p.m. We're doing Conversion Trading is doing a public webinar. We're going to talk about how to correct some common trading mistakes, things that people continuously do that get them in trouble, like messing with stops and things like that. We'll go a list of common mistakes and how to treat them, because your mistakes are the reason you can make money in a simulator, but you can't make money live. The mistakes are just your psychology coming into play. So to join it, go to ct.pro/common-trading-failures, all lowercase. The link is pinned in the live chat, and it's on the Twitter stream for Conversion Trading. You can find that at twitter.com/conv trading. Good luck.